Welcome back to the Till. My name is Kevin Retcher. I'm the owner of First Meridian Mortgage, licensed mortgage broker in Virginia, Maryland, DC. And I have one goal, that's to save you money in conjunction with your mortgage, your real estate, or insurance needs. The Till stands for Truth in Lending and in Life. Let's get into it. I'm so excited to let you know that right now my number one wholesaler is offering free one-year buydowns. That's right, one-year buydowns on all mortgages. The VA, conventional, and FHA. Here's the thing, what does that mean to you? If your start rate was 5.625, your first year, you actually are gonna get 4.625 as a rate, and you're gonna save money. So let's get into it and break down some of those dynamics and why this is so incredible. So I'm going to show you exactly why this is incredible by showing you a spreadsheet right here. So first and foremost, how is it calculated? A lot of people don't understand buydowns. I'm not a fan of buydowns unless the seller's paying for it for you or the lender's paying it for you. But there is a little caveat. If you refinance, if you pay it for the buydown or a seller pays for the buydown, if you were to refinance and there was any money left over from the buydown, you would actually get it back. If it's a lender paid, it's up to the lender on whether or not they're going to give you the money or not. In this particular lender's case, they don't, but it really doesn't matter. This is free savings for you in this particular situation. So a buydown works like this, right? So in this scenario, we've got a $650,000 loan at 5.624%, right? On a buydown, they're gonna pay 4.624%, 1% lower on the buydown. So I want to go over how it's calculated so you can understand, right? So they take the first 12 payments on the loan at 5.625, right? So that goes all the way to here. And they analyze this and they figure out how much principal and interest is required for those 12 payments. They do the same thing over here. And the key thing that you have to understand is the principal balance has to be the same on both of these loans. That's the key. So they add up the total payments here and the total payments here, right? That comes over here. It's $40,098.24 on this one and $896.32 on this one. So that's a difference of $4,798.08. They then divide that by 12, right? And it comes out to be $399.84 cheaper per month. So they then take that $399, they take the payment here, and then they subtract the $399.84, and that's why your payment would be $33.41. The lender is putting this money into an account, and every month, 1/12 of that money goes to making the payment. This is the key that a lot of people don't understand. The lender is still getting paid his full payment, $37.41. But in this case, UWM is subsidizing this money for you. So since you don't have to pay for it, I'm perfectly happy giving you a 1-0 buydown and selling it. But here's the thing, a couple things for you to think about and understand, right? So when it comes to interest rates, I want to make sure that that buydown is the same on the quote as if you didn't do the buy down. Because if you're taking a higher rate because of that, then in fact, it doesn't necessarily do you any good, right? So in this particular situation, we're going to look at the interest rate here, right? So 5.609 would be an interest rate with a 1.0 buy down. So at 5.625, if we mark that real fast, right? We mark that right here. You're getting paid $504, right? And you're getting paid this money, but for the first year, you're only going to be paying 4.625. So they're giving you that as a free buy down, right? So that is, and the way to double check that, right, is to then go back and take out the buy down, right? We want to make sure that they're giving us what we're supposed to be getting accordingly, right? So we're going to get a quote, and we're going to double check that buy down's actually being given for free, right? So it's important to understand those dynamics. And 5.609 is the rate that you would be quoted for a 0-point loan. This was a VA loan, 100% financing, and if he took the 5.625, he'd get paid $504. Remember, when you pay points, you get a lower rate, but you end up having to pay that higher money, and you don't want to do that. So in this situation, they're giving you a free buy down, and in this situation, it's essentially working out to be a situation where you're saving $4,798 over the life of the loan, because this lender is giving you a free 1-year buy down on a VA loan. So personally, that's pretty incredible. When it gets right back down to it, my name's Kevin Retcher. I'm the owner of First Meridian Mortgage. If you have any questions, give me a call. My office number is 703-799-5626. My cell, 703-201-6138. I am a licensed mortgage broker in Virginia, Maryland, DC. I also have 34 other states covered with other broker owners that I can refer you to. So if you're in another state, you need a recommendation, give me a call. Happy to try to help. I'm also an insurance agent and also a licensed realtor. So everything to do with fundamentally helping you save money on your mortgage is one of my primary goals. Again, welcome back to the till, and please like, share, and subscribe if you can, and I'll talk to you soon. See you in the next video. Semper Fi to all the Marines out there. Talk to you soon.